Hey guys, welcome back to the channel. Franco with Trading Futures Live here. In this video, I will review my trades from today, July 12th. Let's jump right in. We go to my H1, the 12th, where I had two trades, both to the long side, which is not very usual for me, but I said in the beginning that I was sort of like bearish for the day, which I still am, but the dollar did not move to my demand. So when I was trading these, I was expecting the dollar to keep going on to the short side, meaning the dollar dropping, the market's going up. So that's why I was playing the long, and I will review what I said in the pre-market video. I invite you to come every morning at 9 a.m. because we do a pre-market video, and then you can have like an idea of what we're thinking about how the day is gonna evolve, right? So let's jump right into the trades. First, I had a break even. I had this demand, right? But when price came into this demand, the internals were not in my favor. So I decided to place an order here, right? Using this demand impulse, right? Breaking this high, I put a stop limit order right there, right? It ended up stopping me out break even because it moved 1-to-1. I was risking just this red candle, and as a matter of fact, it worked right after they stopped me out. But that's okay, that's my plan. I was taking a higher risk and lower probability because the higher probability area is 11,824. But regardless, I was able to be 1-to-1 right here, and then I moved my stop, and then it ended up working. If we go look at the internals, the ADQD was certainly trending down, right? But after this rejection, I was watching the dollar, and I will go back to the dollar chart later in this video, right? But I was watching the dollar, and I was expecting the dollar to drop, right? So here is not a bad move because the ADQD was starting to retrace to the upside, and when it started to come back down, meaning this is the corrective move, for me this was the impulse direction, right? The corrective move on the ADD or the ADQD, better. And then I engage here. Here I also see how the tick chart was not making new lows here. This was a low created here, another low, higher low, right? It was not creating new highs, but it was sideways, right? The chart on the NQ was very sideways. If you see here, it was chopping around for like 20-30 minutes, and finally broke out of the range. So that's my first. The second one is also a long. Is the same area. Here is where I was stopped out. Then it created this area. I had a limit order here with the stop here. This was more like a pullback continuation type of trade. I don't move my stop till it went to my target right here. Again, ADD again was up and then correcting back down. I engage here in my trade. This is the better entry, but who knows? I had the area. I just got in long right here. Fortunately, I was not stopped out. I gave it a lot of breathing room. Here I also see how the moment of my fill, the ADQD was not the tick chart was not making a new low, and it's when it does this, it didn't break these lows here. That's where I decided to engage, right? Here I have, well, this is the entire picture. This is the whole chop from like the previous 30-minute candle, and then it came back, double bottom, and then went straight to the supply. I wanted to show you my analysis from the morning. This is the chart of the US dollar, right? And I was trading around here. I was expecting the dollar to continue to go down. That's why I wanted to go long, right? I said in the morning somewhere around like this, probably today or tomorrow, if this demand is going to be effective, right? It can fail also, but if the dollar was here, I didn't want to go long. The dollar was around here when I was trying to go long, right? That's why my trade ended up working, both of them. Now I got stopped out break even, and what I made a mistake was in the morning. I had this supply for the NQ. I was expecting the dollar to go down to the demand and this to this supply, but certainly the movement was even more volatile, right? It went up here, then the dollar came to the demand and it started to drop back again. Now it's chopping around. With that, I'm gonna wrap up this video. I'm gonna pass it over to George, where he's gonna review his trades today. Oh, today is a plus. I got +3. Yes, I got +3. No, this is for the week. Sorry. So I got on this one. Yeah, +3, +3R in this trade. So I'm gonna pass it over to George. He's gonna review his trade. See you all back tomorrow, 9 a.m. with the pre-market and 9:25 for the live trading. See you.
Thank you, Franco. If we take a look at my daily recap today, I took a loser, -1R. Today, the 12th. I took a winner yesterday, +1R. So I'm flat on the week. Although my trade yesterday did make it as far as 2R, because I scale out, I only got 1R out of it. So that's something I'm going to need to analyze moving forward, is whether or not my scaling out is working for me or not. I know it helps my psychology, but whether or not it's actually helping my trading and my P&L and my actual results at the end of the day, I probably need a little bit more data to make that analysis. But we'll take a look at that another day. Let's go ahead and take a look at the trade today. Like I said, I did take a loss. The market opened here at 9:30 a.m. and basically shot straight up, but we started to see some signs of rejection, and it came back down and actually broke the where it opened from. It broke the low of the open, and so I had it marked out here. If price breaks below my zone and retests, I would be in short, and that is what happened, and that's what I did. It broke below. When it pulled back, I mentioned on the live that I didn't really have a zone here, so I was going to have to rely on the price action to get into the trade. When it gave me this huge rejection candle there, I put my entry below that and got triggered in on the next candle. I was never really up in this trade, a little bit in this one candle, but I finally got stopped out up here. My stop was above the pivot, right? And so what I didn't notice was that on my 25,000 volume, I actually had a zone here that was created overnight. I like the 25,000 volume. So I had this zone here, and this is where price came into when I got short. And noticing this zone now could have changed my mind. The zone alone shouldn't have changed my mind, but between that and then the fact that I entered the trade right around 10:15 in the morning. And if we go to the tick chart, it made a new high here at 10:12. Basically at 10:14, I believe this candle closed. And it made a new high on the day. The day opened here, and this was the new high, signaling that potentially this market wanted to turn around and go long. It even broke the trend line that it had marked there. So that should have been a signal for me to take the trade off, right? And between that signal and the fact that I was in a zone on the 25,000 chart, that should have been enough to get me to take the trade off. And then one thing that I actually like to see is huge volume spikes. And so when this candle closed, creating this huge volume spike on the 2-minute, and then we started to see signs of rejection from down here, my entries, the entries that I like are the low of that high volume candle. So we came into the zone, then we created a volume spike to the upside as this candle was being created, and potentially signaling a reversal to the long side. So I would have had an entry right there at the low of this candle. So when it pulled back in this candle, I could have potentially been long with my stop below the pivot, which could have been a much smaller zone than I normally take of 10 points. I could have even taken a 5-point stop. And that was a potential trade there. At the same time, the advanced decline had pulled back to the 21 EMA, but broke that trend line as well, and the 20 EMA was holding there. The 21 EMA that I have there was holding. So that would have been a potential long entry. Now, originally, I didn't necessarily think that this was going to be the low of the day. So when I take longs after this move, I like them to be in much clearer areas that I think can be the low of the day. And what I missed was the fact that I had this zone down here. So if price would have come down to here at the time, I would have thought that that was the low of the day. But because I didn't see it on the 25,000, which is this doji candle here, which I love on the 25,000, if I would have had that marked out, that would have given me a better indication that this could potentially be the low of the day, which is my A1 setup essentially, is trying to trade the low of the day back up, maybe not all the way up, but at least back up some, right? It came back up to around the open and is created a double top already, and it's starting to break back down. So potentially a good area to short right now. It's breaking the neckline there to the downside. Double top, and you can see it retest these lows. So if you're in it short, you can take it back down to this 25,000 volume area if you're in it. But that's my recap. Not a good day. I did take a smaller position size again, though. The 150 that I basically made yesterday is what I lost today. So I'm basically just flat on the week. And again, I wanted to take it slow this week, working my way back from the week off that we took. So that's my trade recap. Thank you guys for joining us. We'll catch you back here tomorrow at 9 a.m. for the pre-market analysis, and at around 9:20 for our live trading. Take care.